Our next guest, though, finding some under-the-radar opportunities outside of the mega caps. Kevin Dreyer is the co-CIO of Gabelli Funds. Joins us right here live. It's good to see you.
Good to see you.
So there are opportunities outside of mega cap. Tell me where.
Yeah, I know. Who would think it? Yeah, I mean, if you look outside of those that Magnificent Seven, the market really hasn't done anything this year. I mean, almost all the return's been from that, and even despite that pullback today. So we like companies with pricing power, especially to deal with inflation, and certain areas like live events and sports are terrific. I
mean, a lot of these other areas, though, are cheaper for a reason, right? Many are more cyclical, more at risk. I'm taking small caps, for example.
Yeah.
Right? Small caps have gotten crushed, and for obvious reasons. I mean, if you're worried about a more dramatic economic slowdown, you're going to see the most acute pain in small and mid-cap stocks. So why is now the time to look at those, even as we still have serious questions about the trajectory of the economy?
Yeah, well, we're bottom-up investors, as you know, so we're not buying the whole market, even of small-cap stocks. We're buying specific names, and companies like Atlanta Braves Holdings, which, as I said, it's painful for me to talk about baseball today as a Philadelphia Phillies fan, but BATRA and K stocks at 35 to 38. The value of that company is really in the sports team, which isn't going to be affected much at all by interest rates or the economy, and it was just split off from Liberty Media, and very likely to be probably sold in the next year or two with a value of probably mid-50s or even higher.
When was the last time you added a stock to your portfolio?
Oh, we add stocks all the time. Yeah, we're adding stocks constantly. We've got over 30 analysts who are scouring the world, and especially when markets come in like this, we like to let volatility serve us and add to initiate new positions.
Do you feel like volatility is going to pick up even more? I mean, you obviously, though you're a bottoms-up investor, you have to have a bigger view about what's happening relative to interest rates,
Sure.
Whether you think there's going to be a greater upset in the stock market, whether we were primed for an end-of-year run that is now not going to happen. How would you assess all of that?
Yeah, I mean, look, interest rates with a 10-year near 5%, I mean, that's competitive for a lot of stocks. So stocks have competition now, which is probably a good thing. The question is, how much is that priced in to specific names? And I'd say we're probably in the rates are going to be higher for longer camp. Inflation's come way down, but there are signs of it ticking back up. We've got a lot of strikes going on, labor negotiations, so wages will probably still go up, and that part of inflation might be sticky, and that's why, again, pricing power is very important for us when we look for new names.
Does higher for longer also mean then that some of the stocks that you've been looking at from the bottom up may have further to go to the downside before they become even more attractive, if just we're going to be in a higher rate environment that obviously leads to the possibility of more volatility?
Sure, but I would say that how we'd look at it is I'd look at a company like BellRing Brands, for instance, BRBR. So they
BRBR is the
Yep.
ticker.
So they make Premier protein shakes, sells for $2 to $3 depending on the pack size. They just grew 20% last quarter. The whole food industry is struggling with volume growth because they've raised prices so much to cover cost inflation, so volumes are negative. This company is growing 20% right now. They just expanded capacity, so they got a great runway of growth. About 2/3 of their sales are through only Costco and Walmart, so really just two retailers. So they've got a lot of distribution opportunity, and it was IPO'd out of Post Holdings and then spun off almost 2 years ago. So that's another company that could be very likely to be sold. I think it would be very attractive. It's one of those bigger food or beverage companies, for instance. So if rates go from 5 to 6%, will that be a negative? Yes, but I don't think it's going to change the business of BellRing Brands. And if anything, it's going to, consumers looking for value-oriented, on-the-go nutrition alternatives.
How do names like Deere and Caterpillar fit into that paradigm that you described? Because they are among the top holdings for the Gabelli Asset Fund, at least according to latest filings.
Yeah, no, so we followed the agricultural ecosystem for a long time. I think on a longer-term basis, it's got a great runway. We've got a growing global population. They're selling equipment into farmers. They're looking at precision ag and doing other things to be more value add. So I think it's a great long-term story. But in the near term, yes, as rates go up, that makes the financing of equipment a little, more challenging.
Yeah, appreciate you being here.
Thanks, Scott.
Good catching up with you. It's Kevin Dreyer joining us from the Gabelli Funds, as we said, here in Philadelphia.